Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are going to continue our discussion with John Polomny. We'll be talking about the uranium markets, precious metals, and global politics. This is part two of a two-part series on energy and commodity markets. We left off with John talking about the oil and gas markets. So if you missed part one, there is a link to it down below. Without further ado, John Polomny. Alrighty, let's move on to our other yellow metal here, uranium. What is your... I've been getting excited about this one because, you know, it got so overblown when it went up over 100, and now we're actually like spot price is down to 70, but I'm looking at the term market and it's in the low 80s. So I'm starting to get excited about this one. What's your macro view on the uranium market right now?
It's the same it's been for the last 5 years. Growing demand. Nuclear is back. The zeitgeist has changed 2 years ago, 3 years ago. Nuclear is now accepted. Everybody's on board for nuclear. That's terrific. That's the cleanest, best, safest mode of electricity production. There's not enough uranium. There's not enough prospective mines coming online. So that's on the demand side. So you have you have 14.1 gigawatts of new reactors coming online in 2025. I think it's 12 reactors worldwide. You're going to see more of that. So, you know, figure 1,000 megawatts is about 500,000 pounds of uranium demand. When you first turn a reactor on, you need 3 times the amount. You can do the math. I mean, so I'm very bullish on the demand, and I'm conversely on supply. There is no new supply coming online. Okay. Listen to what Geitzel said about what they're going to do, what Cameco is going to do. Okay. Not just going to flood the market. That's not going to happen. People understand this market. The people have been in business 30, 40 years, devoted their life to this uranium story. This is, as Geitzel says, the best environment he's ever seen in his 40-year career. Now, you can discount that and say, well, what do you expect Tim Geitzel to say? He's the CEO of Cameco. Okay, well, I mean, but the facts are there. You look at the other big gorilla in the pen, Kazakhstan. This thing's a basket case. Okay, nobody knows what's happening over there. You have management turnover, that 11 management changes. I don't even know. I mean, people go to jail over there for mismanagement. I don't even know. It's Kazakhstan, for heaven's sakes. It's 40% of world supply. I mean, figure it out. And this plays into the geopolitical situation. If people haven't figured it out yet, that uranium from Kazakhstan isn't going to the West anymore. It's going to the East, and Russia's controlling this. Okay. And so this is why you have to be savvy on geopolitics, contrary to what a lot of people, you know, don't want to talk about, because it's hard, Steve. You know, these things, I have to pronounce countries and find them on a map. I have no idea where these, no, I'm trying to, seriously. So this is what's happening. So you have constrained supply, or the ability to grow. So you saw John Borshoff, who built Paladin in the last cycle. They just had a press release from Deep Yellow this week. Final investment decision for that Tumas mine in Namibia. They've pushed it forward. Why? The uranium term price is too low. Yeah, I mean, it's a basket case. They're not meeting their production goals. And I think, again, goes back to geopolitical analysis, that uranium's not going to be coming to the West. Less and less of it. Most of it's going to be going to the East, the global East. And Russia's going to control that. People don't seem to understand that Russia's, you know, has a lot of influence over Kazakhstan and Uzbekistan and these places. And people can see the framework. I mean, the president of Kazakhstan was saved by the Russian army, that recent coup. So anyways, so where's the new supply come from? And I think, did you hear my comments on Deep Yellow?
No.
Okay, for example, last week, or this week, maybe it was last week, Deep Yellow, who was run by John Borshoff, who's a legend. He built the Langer Heinrich mine for Paladin during the last cycle. Unfortunately, he brought it online at the top and then it went bankrupt, but nevertheless, he knows what he's talking about. They just pushed forward the final investment decision for their Tumas mine in Namibia because why? The term price is not high enough, they said. We're not going to try to bring this mine online at these prices. And so you're seeing more and more of this, not less. So I have a view, and this is a very opaque market. No one really knows. I listen to, I've done some analysis on this thing of what I think production is and what the deficits are. They're cumulative, okay? And I don't see the necessary capital coming into this market to alleviate this supply-demand crunch that's going to happen. And people do continue to build reactors. And so, you had Jennifer Grantham, who was the current energy secretary, when she was down at Plant Vogtle doing the ribbon cutting down there. She said, we need to build 99 more of these in the United States. 99. I've been advocating for that for years, but where are you going to get the uranium? I think last year in the United States, we produced 300 or 400,000 pounds of uranium.
Yeah, it wasn't even 1 million pounds.
Yeah. And so, in the mid 80s, this country produced 40 million pounds a year. So, I think that it is the best, supply demand fundamentals of any commodity I've ever seen since I've been doing this. And, with this wasn't the situation during the last bull market. Nobody was building reactors during the last, excuse me, or very few during the last, everybody hated nuclear. It was on the crap list, anti-nuclear. And so, you've seen a commitment this week, for example, in Japan. Okay, the newer government, we're committing to nuclear because they have no choice. If you want to have an industrial advanced society, you need certain amount of BTU inputs into it every year, and they have no natural resources, so they have to go back to nuclear. And Germany eventually will too. CDU, CSU already issued a paper. When they take over, they're going to look at how they can salvage the remaining, I think, 5 reactors in Germany. Not only will they do that, they'll be building reactors over the next 20 years. It's just inevitable. So, unless you want to, live like a hobbit, scratching out a living in your front yard and collecting eggs in your backyard. I mean, people don't want to live like this. And to have a reasonable standard of living and all the things that go along with a modern society, you need cheap electricity. That's been proven over and over. So I think we're going to be in a situation where the term market just moves higher over. I don't even look at the spot market. This is an opaque market, as has been explained many times by Alkin and these other people, Cuppy. There's 10, 12 entities that trade stuff back and forth. And, the Uzbeks produce a little bit, so they dump it in there. Olympic Dam, when they're producing, they don't sign any long-term contracts. They accumulate uranium, dump it. They just sell it because it's not what they're focused on. So I think you're going to see a situation where eventually we're going to see a company, a utility come out and say, you know what, we didn't pay attention. We weren't switched on enough. And we're going to have to take a D-rate on some of these reactors, which means lower the power production or put it in a cold shutdown because we didn't get fuel for these things. And until I see the big boys come in, until I see a Lundin Mining, a Rio Tinto, a BHP, a Glencore say they're going to get involved in this and bring billions of dollars of capital to this problem, and I don't know why people just aren't, the problem with uranium investing is people are speculating, they're not investing. And so what they do is when the people say, well, a lot of people bag on my friend Justin Hune. I mean, he knows more about this than anybody else. This is his whole life. Well, these companies that you said didn't go up. So basically, people don't like they have a negative attitude because what they're basically saying is the penny dreadful I bought didn't go up like I wanted it to in the time frame I wanted to. Therefore, uranium mining sucks. This whole thing, I discount everything else. The easy money. Where were these people 5 years ago? I remember myself and Trader Ferg on a call like this 5 or 6 years ago. I remember sitting in this exact chair, and when I was joking with him because I had my phone, I was buying Paladin shares at 12 cents a share. Let me buy another 100,000 shares, Ferg. We were joking about it. Okay, those days are over with. The easy money, the long-term, cheap options you could have bought, basically warrants, okay, that's over with. So now you have to be a discerning person. And so you could say, well, Cameco's overvalued. Absolutely. I'm not advocating you buy Cameco. Maybe you have to buy the metal. Now you have to actually do some research because the visions of, an example is a company like Paladin. Visions of sugar plums are going to bring Langer Heinrich back on. But now they're running into problems, not even with mining, just the existing stock, processing that. Okay. And, you're seeing UR Energy. What did they say? They cut their production forecast. What? Labor problems, not enough trained personnel. What did Encore Energy say? I think it's Encore, yeah, down here in South Texas. Not enough drilling rigs to put wells in. So this problem will be solved with sufficient capital and time, but that's your opportunity. And then you have to say, like, okay, who are the real competent uranium teams that actually know what they're doing? Because all the guys that worked at Union Carbide and all these other companies back in the 70s when they had those big booms, they're all in their 60s or 70s now. So is the guy that's running XYZ company that's 28 years old, and he's a promoter from, Vancouver, promoting his junior uranium company? What's the plan? What's the team behind him? Where's the competent uranium team? Because this is specialized mining, whether it's hard rock mining or ISR, mining. So you have to look at, and another thing that needs to happen in this industry is the consolidation. That's what I think will be the next part of the next leg higher. There's too many of these rinky-dink, 500,000 to 1.5, 2 million pounds. This thing needs to get downsized, kind of like what happened in the Permian. And I think the companies that can get to cash flow pretty quick, I'm a big fan of Encore. I like these guys. They know what they have. Look at the resumes of the people there. They've done this before. Okay. People at UEC, I don't necessarily like the CEO. He's too much of a promoter, but they've got people there in Corpus Christi that know what they're doing. Okay. They've been doing this. They know that property. That's their whole life. So, that's what you kind of gotta look for is the management. Now, they have to be discerning. You can't just buy, I'm just going to throw 10 grand at, 10 different juniors that are selling for 5 to 10 cents, and one or two of them will take off. Those days are that easy. As Rick Rule said, the easy money's over with, but that doesn't mean that the bull market's over with. This has still got a long way to go, and there will be a blow off top. Like I said, I don't know when it's going to happen, how it's going to happen, but there's just isn't enough capital coming into this thing to solve this problem, yet they continue to build more reactors. That's why you see China and Russia locking up Kazakhstan. You can forget about it. That stuff's not coming here. And then you saw, the United States has shot itself in the foot. They're the ones that instigated this ban last year. Then the Russians came back and said, well, let's not wait. We'll just cut you off now. And so the last couple ships that left St. Petersburg didn't have any, if you follow this like some of us do, I mean, there's no more material coming. And so it's not just the uranium, it's a conversion enrichment problem too, because there's been no money in that. Look at the conversion and enrichment prices. They're going vertical. That's telling you there's going to be demand. So these things are all solvable with enough time and enough capital, but it's not really happening yet. It will, but that's kind of why you got to be discerning, and you have to do work again. It's not just throw a dart at it stage.
Yeah. Okay. So macro, they're building more and more of these nuclear power plants every year. Looks like this year they'll get 12 of them online, and the supply just isn't accounting for that. We're not pouring the capital into this that actually needs to happen to fuel these reactors. And, until you see a company like BHP come in and just say, okay, we're going to start dumping billions of dollars into uranium mining, the bet is still on. And until you see that, then we're probably not taking any profits.
And you may not see that for a while either, because the uranium market's really not that big. And so it may not be worth it to some of these companies to even do it. So that's why I think you're going to have to see a consolidation, get a lot of these properties kind of like rolled up. I mean, that's inevitable, right? I mean, if the price keeps going up, people are going to start somebody's going to start rolling these things up. And then you can get to a U.S. uranium company, and let's say I'm just making this up, and it has potential for 5 or 6 million, where it's consolidated these different properties like a wheel and spoke type thing. I don't know what people are thinking, but that's what we need to see, something like that also to happen. And because there's a tremendous amount of resources even here in the U.S., but all these little rinky-dink companies trying to grab the same resources with all the overhead, with all the same paying for managements and all this stuff with all the, I mean, you got to pay for listing fees and all the stuff that goes along. Just consolidate these things, 4 or 5 of these things, and, call it U.S. Uranium Mining Inc. And, you're probably better off. I think that eventually that could be another leg higher for a lot of these things if we get a consolidation, which I think is coming.
Yeah. I did the math with Justin. Maybe this was 6 months ago or so. Maybe and it was, what is the market cap of the entire uranium industry divided by the S&P 500, and it was 1/1000th. So this is extremely small. I don't know what it is now. Maybe someone can do the math and put it in the comments below. But yeah, this is such a small market. Any little bit can move it a lot. Okay, Trader Doc wants to know. He says, any thoughts John can share on Argentine uranium explorers and mining? Any names you like?
I couldn't even tell you. I think I looked at one company down there several years ago. I mean, I just can't answer that question. I don't know. I mean, I think that with Malay's reforms, they definitely want to see a lot of mining interest. But again, you're going to be dealing with another more penny dreadfuls, and I try to stay away from that kind of stuff. I just don't know the answer. Yeah.
All right. And Elder Catch wants to know, John Quakes. Okay, so anyone that doesn't follow John Quakes, he's a he's like another Justin Hune, one of a few dozen people on the planet that understand the uranium market as well as he does, and very active on Twitter. If you're at all invested in uranium, you should really give him a follow. So he says, John Quakes commented that a reactor in Mexico is supposed to get fueled in 2025, but the fuel that it uses was supposed to come from Russia, but they banned the exports. Will this delay or rush to get replacement fuel have an impact on urgency of uranium supplies?
Well, I wasn't exactly aware of this particular situation, but this is exactly what I'm talking about. So it's not like you just, call up Oil Patch over here and say, I need 10,000 gallons of diesel fuel over on this, fill up my tanks over here on this construction site. Well, we don't have anything, John. I'll say, well, I'll just call Kirchman and Son or whatever and get them to bring it over. It's not like that. This stuff has to be planned out. The first thing you do is when you're running these reactors, is you're planning out your fuel cycles years in advance. Okay. And so you contract for your enrichment and conversion and the fuel rods you made, then you go out and try to get uranium. So if we have a utility in Mexico that had contracted for Russian material and they're not going to get it, this might be the musical chairs situation where they have to take a D rate. They can't just go out and pick up the phone and say, well, just get this other guy to send us this stuff. You just threw a wrench in the middle of the whole long-term supply chain and project management for this fuel refueling. So I don't know the exact circumstances, but yeah, that's what's so dumb. This is what speculation is about, right? It's about looking how people make mistakes, especially governments, where they shoot themselves in the foot and they don't look at the fallout that can happen from a dumb decision. Because, Ukraine, everybody needs to salute, and so we're going to, Russia, Putin, bad man, therefore ban all uranium. Well, 40 something percent of the world's enrichment comes from uranium. What's your plan? You don't have enough enrichment capacity. So, people do these things because they're all part of the same globalist clique, and they're all morons to begin with. What country actually has a real energy plan? Well, China does. India has a pretty one. What's the United States' energy policy and plan for the next 10 to 20 years? Can you articulate it? Because they don't have one. There isn't one. Drill, baby, drill. Well, we already talked about that. So I'm sure Mexico doesn't either. So you start getting on these bandwagons. Okay, well, you just can't call up another entity and say, well, that stuff that we were scheduled to get on this date isn't coming now because we banned. Is that in the interest, if you're running in the Mexican government, in the interest of Mexican citizens? No. But that makes you look good and virtue signal on the world stage. So I don't know this particular situation. This is exactly the kind of nonsense that's going to lead to, that musical chairs thing. Well, we have to take a D rate now or shut the thing down until we figure out where we're going to get our fuel from. Okay. Because it's not a pick up the phone thing. This is planned out over time. I was in the utility industry. I haven't been part of a nuclear outage, but I know guys that when I worked at Duke that did this, they plan this stuff out for years. They've got all these project management. They know exactly when the fuel is going to arrive, where it's at in the cycle, at the fabricator. They know all of this, okay? And so if you just all of a sudden pluck something out of that by saying we're no longer going to allow Russian whatever in this particular case, well, you got a problem there at that reactor. So you only need a few of those, and then people are going to start, paying attention.
Yeah. Yep. Okay, that's pretty much what we're betting on. All right, Tom is asking, he says, John, will the recent spot $1 billion raise for uranium purchase test the spot market?
I couldn't tell you. I mean, like I said, I mean, if they raised $1 billion, and I think they have the ability, they've raised their ability to raise, right? I mean, I don't think they actually have the $1 billion. They said that they could do their at the market operations depending on what the net asset value is. Yeah, that you have this underlying bid under the uranium price, spot price with Spud. That's not the only entity, right? You've got Yellow Cake out there. You have other entities coming. I think I read, I haven't kept track in a while, but I think there's 2 or 3 other entities, one in Singapore. The Kazakhs supposedly started one a couple of years ago that, to buy uranium too. So I think that when you're already in a undersupplied market and you have just entities that have financial interests that aren't usually necessarily using the material, yes, they are going to cause at least a floor under the price and have those constant bids out there. They'll be bidding against these utilities that are trying to get the same material. This is why I think Kazakhstan just basically gets locked up by China and Russia. You're not going over time. I mean, they have contracts still in place, but over time, they're just not going to ship the material to the West anymore. Why? They need it. So how are you going to build these 100 reactors in the U.S.? I mean, what's the rest of the world going to do? So that's why I think it's very important. It's not just in uranium; it's like in a lot of critical materials. And the United States, because they financialized their economy, because over the last 40 years, kind of ties back, and the government wasn't paying attention. There's all kinds of whole lists of critical materials that we've taken for granted. Excuse me, a lot of people's medications that they take, all this stuff is manufactured in China, or China controls it. And so now, you have the CNO of the Navy, Chief of Naval Operations, telling her force to be prepared for a war in Taiwan in 2027. I mean, these people are bonkers, man. And but this is, of course, going to lead to more volatility and opportunity for people that actually pay attention to what's going on and look at things for the way they are. See, the problem is with a lot of people have with me is I don't really care. I'm agnostic towards these things. I'm not, nationalism is the idea that the country I live in is the best because I live there. I don't really care about that. I'm in this to make money. I got to eat what I kill. My goal is to what? Take care of my family and the people around me that I need to take care of. And so I'm going to look at things. I'm going to try to do everything I can to suppress my biases and look for the things the way they are, and then look at the opportunities. I tell the story all the time. When Barack Obama got elected, he's a socialist. He's going to wreck the S&P bottomed at 666, if you remember that. Well, when he got in power, one of the things that happened was that a lot of people that I knew that were conservatives or had that persuasion, I'm not going to, this market's going to do terrible. This guy's a socialist. Well, the Federal Reserve began cutting rates and printing money. And what drives markets in the short and medium term? Liquidity and sentiment. And so where's the S&P now? How much money did somebody leave on the table because they allowed their political bias to get involved? And people say, well, John, you're the most biased guy out there. But if you saw my portfolio, you wouldn't think that. I don't care. I'm eclectic. Okay. I have my own personal views, but if there's an opportunity somewhere, I look at it for the way it is. And that's the problem that people don't do. And they get caught up in, you're in this to make money, not be right. I mean, that's why I'm in it. So, and people need to understand this. This all ties together, Steve. Let me just go off on a tangent here. You better have some assets, like Munger said. He gives us advice, and I'll use this exact term. You got to get that. Well, it's probably about 250 or 300,000 now, but he used to say you need to get that first 100,000. Okay, it's a bitch. That's his words. Whatever you do, you got to get it. Do it. Then you can take because if you don't have any assets, you're not participating in anything. Okay.
Yeah.
And how are you going to stay ahead of inflation? How are you going to stay ahead of all of these things as the West continues to deteriorate? As I think it will. It's going to become more difficult, not easier. And if you're not an asset holder, it kind of goes back to another article I wrote talking about the Cantillon effect. Okay, and how people that hold. This is why, we didn't see asset price inflation over the last 20 or price increases over the last 20 years until recently. with all this money printing. Yeah, but you saw asset price inflation. So if you were a holder of assets, you benefited. And this is what people don't understand. And so I think you got to be in the game, and I think you have to look at things as best you can for the way they are, not the way you want them to be, because that's what I think trips a lot of people up.
Yeah, and one of my favorite investments is cash flowing real estate. As inflation goes up, it follows, and you keep up with the cost of living. You know, it's a wonderful thing. People always need a place to live, and they will pay you to do so. Um, okay, speaking of assets, let's move on to precious metals. So Edward is asking, well, maybe give us your macro view on precious metals, gold and silver.
I'm bullish on gold and silver and platinum. Gold's done very well. Gold, I think, actually beat the S&P this year, or was at least equal to it. It's done that, I think, the last couple of years. The metal itself. Now, when people talk about gold, they're usually talking about penny dreadful gold stocks. They're not talking about bullion. I look at gold bullion held that you hold yourself, and there's different ways to hold it. You don't have to hold it in your house and be scared, but this is an insurance policy, and it protects you against government and central bank malfeasance. And, I'm in good company. I like what Ray Dalio said. My favorite video that I show sometimes, it's probably a 5-minute talk he gave to, I think it was the Council of Foreign Relations or some other investor big shots. And he was talking about gold being a competing currency. And he was going on, and he was like, you could tell he was like uncomfortable talking about it, but he finally just said, yeah, the lady asked him, the interviewer, well, what about it as an investment? He goes, well, I believe, people should have 10 to 15% of their wealth in it because it's an insurance policy. And everybody started laughing. He goes, and he says, well, if you don't have some money in precious metals or gold, then you don't understand economics or history. And that's exactly right. We just talked about at the start of this interview where things are going. See, the problem is just because something is certain, it's certain that I'm going to die, but it doesn't mean I'm going to die today. Just because the United States is bankrupt, which it is, doesn't mean it's going to manifest into a financial crisis on Monday. But these things are inevitable. And so you should, does it take a year? Does it take 30 years? Does it take 100 years? But you should still have some insurance. And I think, one of the things that's really, it kind of ties back into this whole thing I talked about at the start. The driver of gold prices over the last few years has not been retail investment in the West. We haven't even seen that yet. There's total apathy towards precious metals with American and Western investors. It's all central banks from the East. And why did they start buying a lot of gold? Well, when the world hegemon basically cuts out one of the top 5 economies in the world from the SWIFT system and confiscates $300 billion of their assets because they don't like the fact that they're supporting other ethnic Russians in 2 eastern provinces or oblasts in Ukraine that nobody coming out of your local Kroger can identify on a map. The rest of the world wakes up and says, gee, if I get on the shit list, maybe they'll confiscate my assets and cut me out of the SWIFT system. And so if I have a lot of U.S. assets, wink, wink, China, honk, honk, over $1 trillion, guess what they've been doing? They've been running off their treasury securities and buying gold in their possession. There's no counterparty risk then. That's what's been driving the gold price. Eventually, I think that, with the policies that are being followed by the West, you're going to see more interest. Right now, with the crypto, we're in the current crypto phase because it's a liquidity situation. It's going to do exactly what it does before. It's going to blow up. Bitcoin's going to blow up. I've sold all of my cryptocurrency. I dabble, but it's Lynn Alden did an article on this thing. Liquidity and Bitcoin are correlated by at the hip, like 90%. So when Bitcoin's going up, that's because liquidity is going up. I still don't get the real use case. A lot of people make these arguments, have fun staying poor, the whole thing. This MicroStrategy thing is going to blow up in Michael Saylor's face so bad. And so, it'll be another return trip back down. But gold, I'm going to put my faith in something that's been used as money by man for 5,000 years. And so it's an insurance policy. It's a method of saving. It's not prone to, yes, the concept of Bitcoin is good. It's a deflationary currency. But Aristotle talked about the five or six things that constitute money. People should look that up. I'm not going to get into it near store of value and all these other things. But Bitcoin doesn't represent that. Okay. I don't know what it is. I think it's more of a liquidity thing. And of course, it's been financialized. Once it got to a certain market cap, everybody was against it. Now they're all for it. You have ETFs, the whole shebang. But the problem is that, you still have a lot of shady dealings, and so people are counting on, well, incoming president said they're going to create a Bitcoin. That's all fine and dandy. I don't know what's going to happen. I'm still bullish on gold. I like gold. People could say you have a bifurcation between the younger generation that's more electronically savvy. That's why they're more drawn to these cryptocurrencies. I think it's just FOMO and greed. These things move a lot and people are able to make money. That's why they like them. But for the average person, if I'm trying to get past a border guard and I can give a couple silver coins, what am I going to do? Get my cold storage wallet out and transfer? I mean, come on, man. I mean, it's just, and I think you're going to see gold's going to be remonetized over time. Central bank holdings of gold up until recently were at all-time lows or generational lows. Back in the 70s when I was a kid, I don't know how old you are, Steve. You're younger than me, but
45.
okay. But I mean, central bank reserves of gold were 70, 80% of their reserves. And as they financialized the economy worldwide, that went down. Gold was a rock. You remember Gordon Brown selling the UK's gold at the exact bottom at $2.52 an ounce or whatever, the stupidest trade of all time. Okay. And so now, because of this political dichotomy and this emergence of global South and East, I saw an FT article where the United States has 60% of the emerging market countries under some type of sanctions. I mean, people are not going to want to be holding U.S. treasuries in that environment. These people are out of control. And, it's kind of like Princess Leia talking about Darth Vader. The more you tighten your grip, the more systems are going to slip through your fingers. It's the same thing. And so the Chinese are not offering that. They're not invading countries. They're talking about Belt and Road. This is going off the track and people don't like this. They don't like it, but I'm sorry. This is the future is in the East, not in the West. That doesn't mean that these are perfect societies. And it doesn't mean if they have a hegemon, it's going to be wonderful, everybody. I don't know. But I can tell you something right now. It's more attractive for people to, this is why you see all these things. Now you have, just to give you an example of how things work, this recent thing in Syria that blew up. Okay. Now Saudi's starting to vacillate whether they want to join BRICS or not. You see, so there's this constant maneuvering, gamesmanship. People should read Zbigniew Brzezinski's book, the Great Chess Board or whatever. I think that's the title of it. He explains all of these things. Okay. I have to give the credit to the neocons and to the hegemon. They outlined what they were going to do 25 years ago. Wesley Clark talked about that. They were going to get rid of 7 countries. They've got rid of all of them except one. Guess which one's left? The regime in Iran. Okay. Now they ran up $24 trillion in debt doing it. And they're probably, it's a Pyrrhic victory probably for them. But they got Libya. They got Iraq. They got Syria. Okay. You don't hear a peep out of Egypt anymore, do you? They don't say anything about anything. They just are there, right? I mean, Sudan, these places, Somalia, these places they wanted to deal with, they had a whole thing back in the early 90s. And they got what they wanted. And so, countries, realize this. They're like, we don't want to give any opening to them to be able to shut us out of the world economy. I mean, Iran's been under sanctions since the revolution. Okay. And so it's a country that probably has the 3rd or 4th largest natural gas reserves in the world. They can't do anything. They're just sitting there, unless you institute the type of government we want, then we're not going to allow you see. So this is what drives people towards the BRICS and things like this. So, but that's what I'm saying. Iran doesn't own U.S. treasuries as far as I know. Why would they? And the Chinese, when you're telling the world, the incoming administration, all the think tanks that China is our biggest adversary. They're not threatening to go to war with us. I mean, they're dominating world manufacturing. They have a homogenous society. They have a different culture. They have a higher IQ overall in the country, more engineers graduating. Of course, they're going to become the world manufacturing hub, all these things. Okay. They're going to slowly but surely, people got mad what Vivek said last week about the United States. That's exactly right. You've imported the third world. What? Nobody wants to work here. This is another reason why I retired. I got all these young engineers coming, FEs. They don't want to go out in the field. I have to kick them out of the construction. Go out there and go make an observation. Your job isn't behind a laptop. Hey, it's 4:30. Can I go home? This is 80-hour work week out here on these construction sites, bro. It's not 40 hours a week. That kind of stuff. Of course, you're going to get outworked, but people don't want to acknowledge these things. So, anyways. I think going back to gold, I think it's going to get remonetized. People are going to, they're not going to want to hold bonds and treasuries and U.S. dollars. That doesn't mean the dollar is going to go away, but I think gold in that environment is going to have a bid under it. And eventually, I think that, eventually it's going to enter a bull market. Maybe, as one guy said, I agree with him, when we see the stock market peak here in the U.S., then I think there'll be more interest in real assets. And I think gold probably does well in that environment. And if Bitcoin blows up like I think it will, then people are going to be, the thing goes in, we've had a couple of these cycles, right, where Bitcoin goes up. And then that's the whole reason I started my channel back in the first time it had a bubble when it went to like 16, that was like 2017. I think that's when I started doing all this. And it dropped and then it recovered. And the next liquidity cycle, that's what it does. So, but I think people, gold has been up quite a bit the last couple of years. And, I think a segue into probably your next question is, well, what are gold stocks going to do? Well, I mean, at these prices, you have to find the gold companies that have managements and properties where they should be enjoying tremendous cash flows. But there's still some miners out there that can't do very well in this environment. So eventually you're going to get a gold stock bull market. And it'll be tremendous, but I just don't know. It's on timing. Same thing.
Okay. Yeah, I see the same thing. I see a lot of similarities right now as to when you remember when the NFTs were flying around. And I'm just like, I don't even understand these things. And people are betting thousands of dollars on these stupid little hologram picture things. And, now we got the Hawk Tuah girl with the fart coin. And I mean, it's just absolutely ridiculous. And generally speaking, when we have ridiculous environments like that, shortly afterwards, when they crater, gold does really well. So I agree with you, I think. And especially the way, like you said, I mean, that was one of the dumbest things I think that our big thinkers could have done with Russia is sanction them out of the SWIFT system. I mean, we have the reserve currency, and we essentially told them that, you can't play in that in that field anymore. And what did you expect would happen? Of course, people are going to be selling off their bonds and treasuries after that. Yeah, okay. So Edward is well, you kind of hit on it there with gold miners. You think that there'll probably be a leverage bet to gold when the time comes?
Oh, absolutely. I mean, unless it's very possible that the whole dynamic has shifted and I'm wrong and, have fun staying poor, boomer. But I just don't see that happening. You're in the same situation, but you have to be selective, right? You have to look at some companies that really know what they're doing. And again, what people do is they don't go to like an Agnico Eagle or something like that. They go to some penny dreadful that's constantly raising money and it's the same story with resource investors. They don't buy these things. I'll give you an example. You talked about oil earlier. I saw something on Zero Hedge a couple weeks ago where Exxon was trading down at a valuation relative to the S&P that was similar to the COVID lows. You don't have to go out and buy Tuck 2 resources just as I talked about. Go buy Exxon. It's cheap. Buy the best of the best. Same thing with these gold stocks. They're out of favor. Don't go out and buy, Saskatchewan gold mining and moose pasture. Go buy Agnico Eagle or Alamo. Some of these companies that are cash flowing. They have great prospects, good managements. I like Anglo Gold, for example. I've talked about it. They got new management in there. They just did the merger with Centamin. They moved the headquarters to Denver, which is a mining. They're doing all the right things. I can buy, I collect baseball cards, Hall of Famers, right? And so I collect only graded cards by PSA. And so the ranking system is 1 to 10, 10 being the highest. If I can get a Gem Mint 10 card on sale, I'm going to buy it. Okay. I'm not going to go buy a 5 or a 6 when I can buy a 10 and get the best of the best. And that's what people should do in these things. When they're out of favor, no one likes it, and you're interested in gold mining, don't go buy a bunch of juniors, because it's nothing but problems and raising money. And, I tell people, if you're going to get involved with this, please go to one of these resource shows in Vancouver or wherever and walk the hall. Go to the lectures, pay the money, and listen to it. It's visions of sugar plums, and then walk the hall of all the companies that are there. And that every single one of them has a story, and they know how to talk. And you'll have a stack of brochures and everything. You'll be like, wow, man, there's a lot of, yeah, but 1 out of 3,000 prospects becomes a mine. Okay. And so, mining is a horrible business. It sucks. It's a net destroyer of capital, except for small periods of time when you have excess profits. And so, and you have to, I hate to use other cliches that people say, but Rick Rule has said, you're either in this business, you're either a contrarian or you're a victim. And so when things are out of favor or selling below the cost of production or what have you, then you have to buy, if you can buy the best of the best when things are out of favor, then you're positioned yourself for when things turn. And I used to do that when I was younger. I'm going to get all these penny dreadfuls, and then, I'd go back and look at my account 18 months later. What does this company even do? I don't even know what this company does. It's down 90%. It fossilizes in your brokerage account. It's not a real business. It's like, that's what a lot of guys do, unfortunately. And then they don't get the returns. And so, your goal here, very simply, Steve, as I say this when I go in every interview, most people should just go enjoy their life, raise their kids, go to ball games, go fishing, and just put all of their money into, like Meb Faber says, just get yourself, structure your thing around ETFs and stuff, like based on what the world is. Like, certain amount goes into China, a certain amount in the US, whatever, and use and rebalance every year. Okay. You're going to get 8 or 9% a year compounded over time. Okay. That's what people should do. I don't even say put all your stuff in the S&P because it's overvalued right now, but structure yourself worldwide. You're able to do that. Okay. And then rebalance every year based on the size of these economies or what have you, or what underperforms and overperforms. If you're going to be an active investor, you're trying to beat that S&P. But the problem is when we have these excessive bouts of liquidity, we have fart coin that goes up, I don't know how many 1,000%. And then people think these are like realistic return expectations. And so when I'm talking about, buy gold or buy Anglo Gold or buy Agnico Eagle or buy whatever, and it's paying a dividend, or it's paying, 6-7% dividend like Shell or Total, and they're going to raise production and they're buying back $10 billion worth of stock, you're probably going to get a total return in a good year of 12 to 15%. And things not going to go out of business. Well, 12 or 15%, I could get, Bitcoin's up 1,000%, man. What's this guy talking about? Well, where are all these, that's not the average person. And so the media loves to show you that guy. I mean, there's story after story, the guy bought this. I remember that one guy, it was recently before things really took off. The guy that made like $450 million on Tesla stock or whatever, or options, all the stuff he was doing. And then his account blew up and he went to zero. And then he's suing now all the fiduciaries because they tried to go to him and say, look, man, you're, centimillionaire now out of nothing. You might want to just, diversify, and there's tax problems here. And they came to him and, you're a high net worth individual now. Here's all the experts. No, he didn't want that because he's, this is going to continue forever. This is the problem. And guys got to get out of that mindset. If you set yourself up and do the work, you're going to set yourself, as Trader Ferg says, set yourself up to get lucky, and you will. Okay. But if you're just trying to hunt, if you're just trying to be, who would you rather be? An all around ball player that hits for high average and, hits 25, 30 home runs? Or do you want to be, my favorite player of all time was Dave Kingman. He was a 3 outcome guy for the Cubs and the A's. He hit about 202 every year. He'd hit about 50 home runs and strike out 250 or 300 times. So he would either walk, hit a home run, or strike out. I mean, that's a hard way to live as an investor. Why not be more set realistic expectations, look for undervalued situations, and then buy the best of the best. And if you can compound your wealth that way at, 15, 20, 25% with the occasional 3, 5, or 10 bagger in there to juice things, I think you're going to be very happy. But if you're constantly chasing things around like a brainless walleye, the shiny object, this is what people get in trouble. Okay. And they swear off the markets, or I bought this crap. Justin Hune said uranium's going to go up, and I watched a video and he said that, and I bought this company that nobody ever heard of, and it didn't do what I wanted to, and so he sucks and this market sucks. That's doing a disservice to yourself, and I think that's what happens. So that was a long answer, but I think it's important to say that, because there's a lot of brain damage in doing a lot of this research, and I do it because I like it. It's like a hobby for me. But if you're just a regular guy living a life, you working a job, schlepping a job, you got kids, you got all this other stuff, you're competing against the best of the best. Rick Rule ain't no joke. Marin Katusa, they're sitting at tables with people, getting terms against people that need money. Okay, private placements. That's really the way to play this. If you're just retail investor, you have to play a little bit smarter, play the game smarter, because otherwise you're just going to get ate up. Go to one of these shows and talk to these people with an open mind. You'll be to yourself, wait a minute, now I see what this industry is really all about, raising money. There's a lot of people out there that are just in this to call themselves CEO, fly first class, and just keep raising money to keep the lights on. Anyway, that's my speech on resource investing.
Lifestyle companies. I've met plenty of them at these shows.
But am I wrong? So
Oh, yeah, I know. I know. Yeah, if anyone wants to know what they are, I'll see you in Vancouver here in a couple of weeks, and I'll tell you over a beer, but I will not mention it on the show. Okay, wrapping up here, getting into politics. You usually end your shows with some sort of rant. Let's see. Nomex3 wants to know about Trump coming into office, looking at his rhetoric. He's basically asking, to pontificate on what you think versus what he says, as opposed to what the Doge committee can actually do. What do you think on that?
I think it's interesting what if you watch what he says, okay? A lot of people think he's a moron and all this stuff. He's not. I think one of his Wharton professors said he was one of the smartest guys he ever met. He's crass, he's vulgar, he's a New Yorker. Does he say a lot of stuff that's not true? Yeah, that's what all politicians do. Look, during a campaign, all kinds of things are said because you're trying to get votes. The problem here is this. One of the things, if you remember during the last administration, every time that the market took out, originally when he first got in 2016, the market dipped and then it turned around and went was on fire. And he was constantly out there touting the stock market. He's not doing that now. People need to pay attention. He's actually telling people to be cautious. Let me tell you what's going to happen. This market is one of the most overvalued markets. It's the most concentrated market of all time into 10 stocks. Okay. It's tremendously overvalued. Okay. And I think there's a good chance there's going to be a rug pull, not by some nefarious committee. It's just, going to turn. Okay. We've already talked about the 3 million barrels a day. That's not going to happen. It'll be oil equivalent. They're going to lump all the energy that they can and call it, well, it's the same as 3 million barrels of oil. This Doge committee, of course I'm for cutting the budget. I think it's ridiculous, okay? What's realistic, though? You think you're going to come in there and you have a Congress, number one, that has all these interests, okay? So the things that need to be cut, the defense budget needs. Now I say this and you're going to get stuff in your comments. That's never going to happen. I know it's not going to happen. I'm telling you what needs to happen, but the chances are not, it's not going to happen. The defense budget needs to be cut by 90%. We need entitlement reform. We need it immediately. There's no constituency for any of this. This is the reason why they spread out the defense contracts through all the districts. So everybody, you're not cutting my district. When they went through the base rationalization thing of like a decade or more ago, that was a big fight, okay? And so that's not going to happen. And so they're probably going to cut $250, $300 billion and call it good, because that's all you're going to be able to do. You're going to be fighting against the media. You're going to be the deep state propaganda organ of the traditional media. the bureaucracy, the mandarins that have been there forever, they're not interested in having any of their programs or things cut. The federal workforce, which a large part of them are unionized, they've spent the last 40 years erecting barriers and rules and regulations so you can't be fired, okay? It's not going to be like It's not going to be like when he went into Twitter with the sink, where he's going to cut 80% of the people and then he's going to hang out at a data center and him and 3 of his guys are going to fix all the Twitter problems. It's not going to be like that. It's not how it works. It's not going to be like Javier Milei. After 70 years, like afuera, and he's just throwing the departments off the chalkboard like you saw, okay? That's not going to happen either because the population here is not ready for that. And if you're running a 7% of GDP deficit, let's say you cut that in half. What does that do to economic growth? What does that do to the stock market? If people don't understand, how is GDP calculated? Government is part of that, okay? This government spending, this physical dominance, which Lynn Alden has again talked about. This is why we didn't see, that's what's propped things up. Now we're starting to see it slither out about how things were manipulated under the Biden administration. This guy's walking into a potential mess, okay? The best thing that could have happened politically, in my view, is that Kamala Harris would have won, the Democrats would have won, then they would have to wear what is potentially going to happen. When you have these excessive runs in the stock market, like 1999, I was alive then. I studied what happened with the Nifty 50. I was around for the housing bust. Let's see how bullish everybody is if you have a 50% decline in the stock market. I'm not predicting that, but after a run like this, mean reversion would indicate, you're not going to have a 10% decline when this thing finally, and I don't know what the catalyst is going to be. What's going to happen when this Bitcoin thing blows up, which it's going to, with this crazy Michael Saylor and all this stuff. He's going to get margin called. I'm not saying, you can play these out in your mind. So I think him coming in is over-promising, and people have taken their hopes and dreams and visions of sugar plums and put it on this, and that's what's driven the market higher recently, where it's gotten tremendously overvalued. But even earnings for the Mag 7 are slowing down, okay? And what does that do? You have a situation where earnings growth next year for the analysts are saying it's going to, I showed a chart in the last video, can't remember the numbers, it's coming down for the Mag 7, but they've said that it's going up for the rest of the 490 companies in the S&P. Oh, really? We're running a 3% supposedly positive growth right now, okay? It's supposed to be the best economy ever. And earnings growth for the lower 490 companies was 4% this year. It's going to be 13% next year. What's the catalyst, Steve? And so if earnings disappoint, yes, in the short term, liquidity and sentiment drive markets, but in the long term, earnings is what drives stock prices. And if they disappoint, if you set a bar here and you disappoint, stocks go down. And so there's a possibility that and are we in an environment now where we never have a recession again? If they start cutting like they're talking about, what's going to happen? If rates go higher, what's going to happen? Look at the housing market. You just talked about real estate, so you probably know about real estate. A mortgage now is over 7%. The housing people I listen to, it's a disaster. So, I think that there could be a big rug pull, as I had made a video a couple weeks ago where I said, the title was this, kind of gives you my view to sum it up, is buy the election, sell the inauguration. And I think there's going to be, as reality sets in, this is going to be a lot harder than people think. Now, there's probably a window of opportunity to blame the previous administration, but people have a lot of expectations built into what they want to see. And I don't think this just simply isn't how things work. It's not the first time we wanted to cut government debt. There was the Grace Commission back in the 80s. They made some cuts here and there, but again, the things that need to happen are not possible. Entitlements are 80%. Entitlements in defense are 80% of the federal budget. They're untouchable. So you're dealing with 20% maybe. And then, what are you really going to be able to do? And so the days of the Newt Gingrich, Clinton thing, we're going to grow our way out of it. It's not possible now. And so this is, another risk for next year. And the last thing I'll say to finish is you got to roll $7.8 trillion of debt. It's a big bulge that has to be rolled, because basically the previous administration, as Luke Groman has said, has run our fiscal and treasury operations like a payday loan, all on short-term bills and notes. And because they weren't able to sell, you're not going to be able to sell $8 trillion in 10, 20-year paper next year to roll this debt. What's going to happen unless you raise rates, unless rates go up? Like you said, the bond vigilantes have emerged from their slumber. And so that doesn't count the other. How big is the deficit going to be next year? We're already running ahead of, on a pace for a $1.8 trillion deficit for fiscal year 2025. So you got to sell $9 trillion in paper next year. I'm not saying it can't be done, but I don't think it's going to be done at current rates. And so there's a lot of landmines out there. And I think this guy got in there, and I think that they can see now, deregulation is good. These things are all good individually and then cumulatively, but it takes time to kick in. And so if you have the market go down 50%, or if you have a issue with the treasury market or something like that, and rates go up, I mean, you're going to have a recession. What if I have people that I talk to that are pretty switched on? I can make the case that you're going to have a long bond next year that's going to hit 6%. What does that do to the economy?
Cool.
You're going to have a recession, and then you're going to have a $4 trillion deficit as all revenues. What happens when all those capital gains taxes from this increasing stock? California went through this many times where they relied on a lot of and then they had huge deficits when capital gains revenue goes down and automatic spending goes up. You can have $4.5 trillion deficit in a real recession. Then what are rates going to do? I mean, we may, I'm not saying this is going to be, but then again, maybe it'll continue. I don't know. Maybe they'll pull a rabbit out of their hat. Maybe they'll just be able to steamroll and do whatever they want, but we'll see. But that's kind of my view on it. By the election, everybody's all euphoric and happy, and the market's responded because everybody's put their hopes and dreams. But I think reality is going to set in January 20th.
Okay.
It's going to be a lot harder than people think to do these things. Anyway.
Yeah. By the election, sell the inauguration. John, any final thoughts? Anything I should have asked that I didn't?
No, I think we covered a lot of ground. I know that a lot of my opinions are polarizing, but I don't try to be hyperbolic for a reason. But I encourage people to, look at things not just at the surface, but second and third level repercussions of things, and really fight, as Munger says, your own biases. I have biases, you have them, everybody does. But remember, we're in this to make money. We got to kill what we eat, and we can't. It'd be hard if you were a hunter-gatherer and you were against shooting deer with your bow and arrow. You probably wouldn't survive. So anyway, that's the last thing I would probably say.
Okay. If people want to follow you and your work, how can they do so?
Well, I have the weekly video. Everybody knows about that. And then I moved my whole operation onto Substack, Actionable Intelligence Alert Newsletter. I have a paid subscription service where you get more into depth with actual actionable ways to play some of these things we've talked about. And I also have a free weekly newsletter that comes out where I kind of curate and catalog all the interesting videos, articles, what have you, memes, into a weekly thing that I send out that's free, that kind of introduces you a little bit into my writing and thinking. But I don't actually have any actionable ideas in that. So Substack and YouTube is where I'm at now.
Okay. We will put all your links down in the show notes. John, this was a real pleasure. Thank you for coming back on the show.
Thank you, Steve. I appreciated it.
Yes, and thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.